All right, so we're diving into something pretty crucial today, the first quarter earnings of 2025.
Yeah, these are going to be really interesting.
Yeah, I think they're going to give us some real insights into, where the U.S. economy is heading and how the stock market's going to react to all these policy changes and, just the general global uncertainty.
Absolutely. I think it's the first real, test of the market.
Yeah, we've got a ton of data to sort through for this deep dive. We've got reports on overall economic trends, specific company performances, and of course all the policy stuff that's been happening.
Yeah, and what we really want to figure out for you is, can the U.S. economy and the stock market kind of weather the storm, with all these changes?
Right, because there are a lot of changes happening.
There are.
Okay, well, first off, we got to remember these earnings aren't just numbers on a spreadsheet.
No.
They're a real-time snapshot of how businesses are actually doing, out there in the real world. And one number that really caught my eye is the projected year-over-year earnings growth for the S&P 500.
Yeah.
It's expected to be around 7.7% for Q1 2025, which, on the surface doesn't sound terrible.
Right.
But then you compare it to the last quarter, which was 17.1%.
Yeah, that's a big drop.
Huge drop, right? And it's the slowest growth we've seen since Q3 2023.
And that's really what's making people nervous. It's not just the number itself, it's that slowdown.
Right.
And it's really, raising these questions about, is the economy cooling off?
Yeah. Is this the beginning of something bigger?
Yeah, exactly. And, when you look at everything that's going on, the tariffs, the changes in federal spending and just the, those fears about a potential trade war.
Yeah.
It all adds up.
It's definitely creating some headwinds.
Yeah, definitely.
And we're already seeing the impact on some big companies. Apple, Tesla, Ford, they've all had to lower their earnings forecasts recently. Apple's blaming it partly on slower iPhone sales in China.
Makes sense.
Tesla's got their own challenges in the EV market, which we'll get into later.
Yeah, we'll dig into that.
And Ford's been pretty vocal about how those tariffs are increasing their costs.
Right. And so these Q1 earnings, they're really going to be the first test of, can companies stay profitable with all these, these higher costs and all this uncertainty in global trade.
Right, because it's not just about the U.S. economy, it's global.
Exactly. It's all connected.
Okay, so let's talk about the stock market now. Because the S&P 500 is currently valued at about 21 times its expected future earnings.
That's pretty high.
Yeah. And to put that into perspective, the 10-year average is closer to 18.
Right. So that means that the market's already assuming, a lot of growth in the future.
Exactly. They've already priced that in.
Yeah.
And as many of you probably know, the S&P 500 has already dipped into correction territory, meaning it's down 10% from its high back in February.
Yeah, and that's why these Q1 earnings are so important.
It's huge. Yeah.
Because they could either, confirm those fears and lead to further drops, or they could, be a sign of stability.
Right. Or even a turnaround.
Yeah, potentially.
But if companies don't meet those expectations, it could really spook investors.
Oh, yeah.
Especially in sectors that are already struggling.
Exactly. And some sectors are really feeling the heat right now, like the automakers.
Right.
Insurance companies.
Yeah, we've already seen Tesla stock plummet something like 40%.
Yeah, and travelers, they got hit hard by those wildfire claims.
Right. $1.7 billion in losses.
It's a lot of money.
But, the market's not always predictable.
Yeah, and that's what's so interesting about it.
Historically, there have been times when companies have exceeded those lowered expectations.
Yeah.
And that's injected some optimism back into the market.
Right. And we've seen some pretty impressive rebounds in the past.
Exactly. So it's not all doom and gloom.
Not at all.
Okay, so let's zoom out a bit and look at the bigger policy picture, because the tariffs and the changes to government spending are definitely playing a big role in all this uncertainty around earnings.
They're definitely key factors.
Deloitte did an analysis, and they found that even a 5% average increase in tariffs could slow GDP growth to 2.6% this year. And that's not even factoring in how it'll squeeze profit margins for businesses that rely on imported goods.
Right, and that's a big concern for a lot of industries.
Absolutely. And TD Economics is warning that if those tariffs stick around, it could actually lead to higher inflation.
Which would be a problem.
Yeah, because if inflation goes up, the Federal Reserve might not be able to cut interest rates as much as they'd like.
Right. They might be limited to like 75 basis points in cuts.
Yeah, and that would tighten financial conditions, which could then put even more pressure on economic growth and those corporate earnings.
So it's a bit of a domino effect.
Yeah, it's all connected.
Exactly.
So it's a really high-stakes situation.
Yeah, these earnings reports are going to be under a microscope because they really need to show that the market can hold up under all these policy changes.
Okay, so let's switch gears now and talk about the consumer.
Okay.
Because ultimately, consumer spending is what drives a lot of this economic growth.
Yeah, it's a huge part of it.
And we saw some really strong numbers in the last quarter of 2024. Personal consumption jumped 4.2%.
That's a good sign.
But then in February, consumer sentiment took a nosedive.
Interesting.
Hit a 28-month low.
Wow, what happened there?
Well, the biggest factor seems to be inflation worries.
Makes sense. People are worried about prices going up.
Yeah, and that's why these upcoming earnings reports from retailers and companies that make things like appliances and cars are going to be so revealing.
Right, because they'll show us if those inflation fears are actually translating into, people spending less.
Exactly, and we have to remember that tariffs can directly contribute to higher prices on everyday goods. So if inflation continues and people start tightening their belts, some sectors are going to feel it more than others.
Yeah, for sure.
Like the auto industry.
Right, those big purchases, people might put those off.
Right.
If they're feeling uncertain about the economy.
And the tech sector, too.
Yeah, a lot of tech products are, discretionary spending.
Right, people don't absolutely need the latest gadget.
Exactly. So those are the sectors to watch.
For sure. Okay, so let's drill down into some specific sectors and look at the challenges they're facing heading into these Q1 earnings.
Okay, sounds good.
In the tech world, Apple's an interesting case study.
Yeah, what's going on with them?
Well, on top of the slowing iPhone sales in China, they're also facing a pretty big loss with Apple TV Plus.
Oh, wow. Really?
Yeah, it's estimated to be around $1 billion a year.
That's a lot of money.
And it just goes to show how competitive the streaming market is.
Yeah, and how hard it is to constantly innovate and stay ahead of the curve.
Right, because consumers have so many options these days.
So many.
Now in the auto sector, we're seeing a lot of upheaval.
Yeah, it's a tough time for automakers.
Tesla's earnings per share estimates have been slashed in recent months.
By a lot.
Yeah, like a 33% drop since January.
Wow.
And Ford is predicting some pretty massive losses in their electric vehicle division.
Yeah, something like $5.5 billion.
Yeah, and it just highlights how difficult and expensive it is to make that transition to electric vehicles.
Right, and to compete in that rapidly changing market.
Right, because the technology is constantly evolving.
Exactly.
And then you've got the insurance industry, which is getting squeezed from multiple sides.
Yeah, they've got their own set of challenges.
They're facing rising costs from more frequent and severe natural disasters.
Right, all those wildfires and hurricanes.
Yeah, and those events directly impact their profitability.
And ultimately lead to higher premiums for consumers.
Right.
It's a tough situation all around.
And even the airline industry isn't immune to all this economic uncertainty.
Right, they're feeling the pinch too.
Delta and a bunch of other major airlines have actually reduced their forecasts.
Yeah, they're not as optimistic as they were.
And a lot of it boils down to uncertainty around consumer spending on travel.
Right, if people are worried about the economy, they're less likely to book those vacations or even business trips.
Exactly. So to sum it all up, these Q1 earnings reports are much more than just a bunch of numbers.
Yeah, they're really a litmus test for the U.S. economy.
They're going to tell us a lot about whether the economy can handle these policy challenges and whether we might be headed for a slowdown or even a recession.
And they'll have a ripple effect on all sorts of things like, interest rates, business investment, and of course, stock valuations.
Right. Those earnings reports are going to be scrutinized by everyone from Wall Street analysts to policymakers.
They're going to be looking for clues about how all these factors that we talked about, tariffs, inflation, consumer behavior, how they're all interacting.
Right. Because it's not just about individual companies. It's about the bigger picture. We're at a real inflection point here.
Yeah, these earnings could either deepen the market correction,
right,
or they could spark a recovery.
It really depends on what those numbers show.
And it's something for everyone to think about, as these earnings reports come out. What do you think is the most important factor that's going to determine, the long-term health of the U.S. economy? Is it government policy, consumer behavior, or something else entirely?
Yeah, it's a complex situation with a lot of moving parts.
It definitely is.
And we'll be here to help you make sense of it all.
Absolutely.
All right. Well, that's it for today's deep dive.
Thanks for listening, everyone.
We'll be back soon with more analysis and insights.
See you next time.
Bye.
If you found this discussion informative, please like, subscribe, and share this channel to get daily discussions on a current economic topic.